Good morning, ladies and gentlemen. Welcome to Top Stocks. In our market section, we will look at how stocks are performing early morning, and of course, this is a wonderful day. The maturity of the Indian market at 8 months low is right there in front of you. The Nifty has bounced very strongly from 22,000 as we were discussing yesterday afternoon, and this is a very big plus for long term equity holders who have been in a bout of despair over the last 6 months or so, ever since end of September when the market started to correct, and especially in the early part of 2025 when the correction was really ferocious. I'll request the PCR to fire the long term chart of the Nifty. We have corrected to the extent of about 17-18%, and perhaps the low that was stuck on Friday, which is almost 21,960 or so on the day when GDP data was released, is the worst that we've seen behind us. Of course, markets can fall from these levels, but it seems that at this point of time, the bad news in the market is getting digested. Remember, Monday was terrible for Wall Street, yet the Indian markets were sensible. The underlying granularity of yesterday's trade showed that long side is now favored by market participants. Let's get deeper into the market. The Nifty is up 200 points. The Nifty Bank is up 223 points, and many indices including the Nifty IT index are up 2%. Let me just give you an idea about the broader market statistics which point to the fact that the worst might be over. Let's look at the major advanced decline ratios in the market. You have, hold your breath, 2,222 stocks in the green versus 237. That's a very easy 10:1. Whenever this kind of an advanced decline ratio happens in your lifetime, ladies and gentlemen, after a very serious correction, presume that the market has reversed, and reversed for the better. Now I will tell you many indices that are up 2% on critical days, which is either after a correction of 26-27% or from multi-month or multi-year lows. Look at the Nifty Metals Index, up 2.8%. The Nifty Midcap Select, remember midcaps were thrashed black and blue. The main Midcap 100 index has already corrected 26% from its all time high. Theoretically, it is in a bear market, and this is where a lot of action is happening. The Midcap 100 index, as the screen shows, is up 1.8%. Look at the small cap index, 2% higher. Look at the Nifty Realty, PSU Bank, Auto, Nifty IT, Nifty Energy indices, all up 2.5%. And what's more interesting, ladies and gentlemen, like I have said, this is coming after a mega correction in the Indian markets, both in terms of price and in terms of valuations. So this is an opportunity, and technically we always presume that a 2% rise in an index is the beginning and the start of a new trend, especially if it is after a major fall. I'll request the PCR to kindly file the long term chart of the Nifty IT index. You will see the correction has been to the tune of almost 20%, from a high of 45,973, which was on 16th of December. The index fell sharply to 36,865, which was the lowest since mid-July. And it is this correction which is now being bought into. The Nifty IT index, ladies and gentlemen, is up 2.34%. This could be a good time to look at ITBs, the ETF. I have suggested this in June also. This was June of 2024, and today I am again repeating some quality advice. Please do consult an independent financial advisor if you are getting into Nifty ITBs. But this correction of 20-25% is an opportunity to get back into the index. Look at the Nifty Metals Index. Today's top gainer, up about almost 2.9%. This has recovered from its 365-day moving average. I'll tell you what the all-time high was, and from that high, which is 10,283, somewhere in October, the index has corrected almost 21%. So this, ladies and gentlemen, is an ideal opportunity for everyone in the market to do two things. One, become optimistic, and two, be practical. This is the right time, ladies and gentlemen, to put in an extra SIP. It could be in a large cap fund, it could be in a small cap fund, it could be in a mid cap fund, it could be into an aggressive hybrid. In fact, an aggressive hybrid scheme is one of the best opportunities to tap into the market at current levels. Yesterday, we had reviewed ICICI Prudential Equity and Debt Fund. Today, we will give you an option in terms of a mid cap and a small cap fund at 2 p.m. But please participate at this current level. Also consult an independent financial advisor when you do so, and this could be an opportunity of a lifetime to get back into the market. Of course, you can see corrections which are a part and parcel of overall markets, but this is something that should not be left over, and an extra SIP at this level is something that will do very well for you in the years to come. I'd also like to mark 52-week highs in the market. Today it's the turn of Avanti Feeds. Let's look at 52-week lows. Again, pain. Bajaj Auto, Sun TV, Nestle, Asian Paints, MRF, Bosch and Emphasis. Yes, the markets, some part of them have still to recover, but the point I am trying to make is that you should use this dip for your overall benefit. Even if you can't place an extra SIP, buy a particular fund for 1,000 rupees. Let it be an experiment in your life, and then you will see how this 1,000 rupees is beneficial 1 year down the line. And as yet, I must say, you must consult a financial advisor before you take this step. Thank you so much for watching. I'll be back shortly. Welcome to Market